Hi, welcome to Tax.Crypto. I'm Emery Sheer. I'm a certified public accountant. And today we're going to talk about the new infrastructure bill. Not yet law, but it's working through Congress. And there is a section in the law that's been introduced for cryptocurrencies. So let me just brief you on this. Now, remember, this is not law, but I want to bring it up to your attention because this is kind of how Congress and the IRS is looking forward to see how can they get their arms around the whole cryptocurrency market, the trading, the exchanging, and how this is going to be taxed. They've thrown out numbers, huge numbers, as to how much they feel they're losing in revenues, and there's a number out there of 28 billion. That may be high, it may be low. Nobody really knows where it is, and truthfully, like my clients really want to do what's right, and the issue that we have here is that we don't have much guidance as to what is right. The American Institute of Certified Public Accountants, of which I am a member of, has been pushing for years to the IRS, we need more definition, we need more regulation, we need to understand what it is that you want reported and how you want it reported. So with all of this, we've got a little bit more guidance in the infrastructure bill of how they're trying to put a little bit more of their arms around this. Congress and the Internal Revenue Service, at this point, they're trying to define who a broker is, and they're trying to trace the coins. You buy a coin or a cryptocurrency on Venmo, you can buy it on Coinbase, and then often what happens is that coin is then transferred, that you transfer it to a wallet, a different wallet, you transfer it to Binance, and they're constantly transferred to different exchanges. The problem we have with all of this is that how do we trace what your original cost basis was? If you had a stock and you bought it on Robinhood and then you transferred that stock over to TD Ameritrade or JP Morgan, that cost basis follows that, and you can always the broker picks it up, and it's part of their regulations that they're going to pick up the prior cost basis, and then it gets reported, and you can at any time see exactly what your cost basis is. But when transferring these coins from exchange to exchange, it gets lost, and there's no regulations that you need to track these. And remember, in my earlier videos, I've told you that cryptocurrency is property. So we don't have the regulations like this for property as we do for securities or currencies. So how do you trace this? You need to trace these through the different exchanges. And what the bill is saying is we're going to define a broker. We want brokers to actually trace this cost basis between the different exchanges. Just recently, just in the last few days, there has been a clarification to this new bill that says what's the definition of a broker, because the definition of a broker in the current existing bill is any person who for consideration is responsible for regularly providing any service effectuating the transfers of digital assets on behalf of another person. So this could be a miner that's now putting out a coin. It could be someone who's running a staking pool. We've just received a clarification that this is not the purpose of the definition of a broker. So they said, in fact, specifically, they said, we're not looking to track the activity of a miner or a software developer, so that they would not be included in the definition of a broker. So I just want you to realize that how this all comes together and works through what is now going to be new law, eventually, the infrastructure bill. It will have a piece of it that will be cryptocurrencies. That is going to be then handed over to the Internal Revenue Service. The Internal Revenue Service is then going to create regulations, because they're going to then interpret, that's the purpose of the regulations, interpret what Congress meant. Those regulations now become the body that I, as a CPA, look at, and we then can prepare your taxes based on what we think the IRS meant. Again, we're interpreting also what we think it meant. Often, I go back to the regulations or the revenue procedures and I say, I don't think that's what the code really means. So you have to go back to the code, which is what the law that's being written. So we go back to the IRS code, or the Internal Revenue Code, and again we read that and we say, I don't think that's right. So we take a challenge. We may challenge the IRS, and that challenge often equates into either a private letter ruling, which you can get a private letter ruling, and there have been some private letter rulings or working through the system now on cryptocurrencies. And there's also litigation. You could end up in tax court. And that tax court decision then becomes a new body of law. So I'm just giving you how this infrastructure bill is starting. It's a great way to watch it. It's a very small area of the cryptocurrency market in total. And from here, we'll watch it develop into the IRS, into regulations, into procedures, and into eventually litigation. And this is going to develop a whole new wealth of cryptocurrency law. Thank you. If you like this video, please like it, write a comment, and subscribe to our channel. Thank you.